Hi, my name is Rod Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I'm thrilled you're here. I know you're going to get tremendous value from the gentleman I'm interviewing today. His name is Buck Joffrey, and he's a surgeon turned entrepreneur. He's an investor. He's host of the Wealth Formula podcast, and I've been on his show, and it's a treat to have him on mine. Welcome, buddy.
Thanks for having me, Rod.
Absolutely. So maybe you can talk a little bit about your bio in much greater detail than I did, obviously, and just kind of bring our listeners up to speed on, why you went from an incredibly high-paying, very prestigious position to becoming an investor.
It's a classic story of the highly successful A student. When you are a very good student in school and you end up going to the fancy colleges and stuff, there's really, you go through, this process of programming where you really only believe that you only have a couple of options. You either go to medical school or law school or business school or whatever, and go get your professional job. And I think I kind of fell into that the same way. I mean, being a good student, going into college and being a science major, is getting A's. I mean, what am I doing at 18 years old? I know that I get positive feedback when I have success in school. So I'm looking for the next, Pavlovian opiate. And for me, that was, trying to get a position that was respectable in society. So that's where I went to medical school. It's not that I didn't want to do it. It also sounded interesting to me, but psychologically, the hierarchical issue was big for me. And I actually started out in neurosurgery. And of course, that is, again, even within medicine, the brain surgeon and the, neurosurgical, image is at the top of that hierarchical, part of medicine as well. So I did, that through sort of following programming, following the, what to me felt like the pinnacle of success. But the issue became that, I was never really truly all that engaged. My heart wasn't into it. And it wasn't until reading some Robert Kiyosaki book by accident, where I had no interest in personal finance, that I discovered the idea of being an entrepreneur. And believe it or not, it never occurred to me to be an entrepreneur in any sort of way, to start anything myself, et cetera. I had never contemplated that. It always involved working for somebody or being a chairman of a department or whatever. But when I read Robert Kiyosaki's cash flow quadrant, the idea of entrepreneurship exposed itself to me, and it hit me like a lightning bolt. And the rest is history, because I think at your core, and you know this because I think you are an entrepreneur, is, it's not, you can learn to be an entrepreneur, but there's some people who at their core, that's what they are. And so from that day forward, discovering that, that's who I became. And then I was an entrepreneur who also happened to be a doctor. So I continued to practice for a handful of years, but really, my focus became starting businesses, starting, real estate ventures, and ultimately also, a podcast to try to teach people, what I was doing.
Wow. Yeah, I love that Pavlovian opiate comment. Yeah, it's what's fascinating is I think you are probably the most extreme example that I've ever met of someone coming to that realization about, what we're programmed to think is the path, and you having that. Well, so let me ask you a question before I put words in your mouth. Did you have like this aha moment? Was it the book? Was that it? That was it? Yes.
I think it was. Yeah.
Okay.
Because something about cash flow quadrant. And I told Robert Kiyosaki, because I've been lucky to have met him a few times, and to explain this to him. But there was something about that book that was just resonated with something at my core that really just changed everything. Believe me, I had every opportunity in many ways to, I had exposure to real estate. My dad is, to this day, he's in his 80s. He's still, a landlord and stuff like that. But the way he did it and the way it looked to me through the optics of a teenager and that sort of thing did not look appealing whatsoever. Tenants, termites, and the rest. But that book, sometimes it's like how somebody tells it to you, right? How many times have you had something where you've heard it 10 times, but the way somebody says something to you the 11th time, you actually go, I get it. And that's what happened with Robert's book.
No kidding. Yeah. And it's interesting because usually I hear this story around Rich Dad, Poor Dad, not Cash Flow Quadrant. And I agree as it relates to me as well. That was more eye-opening for me than his first book, but that's fascinating. So I have to ask, because you brought up your dad, I have to ask, what was their reaction to your change in occupation? I mean, that's a major change.
Yeah, it's funny because as you may be able to tell, my background is Indian, South Asian,
right.
And my parents were immigrants in the 60s, and I think in their culture there's a huge premium on physicians, right? I mean,
sure.
Families are judged more on the number of physicians and engineers and highly educated individuals than they are the amount of money they have. And so the funny thing is that for me, my situation was a little different because my dad was an engineer who came to this country in the late 60s, and he himself had an epiphany and became a real estate guy. Yeah. So he was literally taking, his college scholarship money and buying duplexes. So the apple doesn't fall apart.
Right.
Yes. Right. So he was, when I told him I was going to go to medical school, his impulse initially was, why would you want to do that? So that's a lot of years of school. I make a lot more money than doctors. And at the time I laughed him off. I didn't think that he knew what he was talking about.
Wow.
And to a certain degree, he didn't, right? I mean, I'm a different person than him, and certain things were important to me that were not to him. But at the end of the day, there was some truth to what he said. It's just what he was saying is he was trying to, in his own way, trying to challenge me to say, well, why do you want to do that? Is it because of the money? And people think doctors make a lot of money. Well, I make more than doctors, so why would you want to spend all those years that he knew I would have to? So they were not, believe me, they were not heartbroken. In fact, now, now I control $500 million of real estate, and my dad's now one of my investors, by the way.
That's awesome.
For years and years, he didn't understand like what I was doing and, what I want, why I was doing it. Finally, I got into this, and he totally gets it. And his big thing is, I wish I had done what you were doing now, because he's been a one-man show. He's the landlord. He literally goes and collects rent. Still, he's 80.
Oh, no kidding. Oh, wow,
81
that's
years
hilarious.
old. Well, because he doesn't trust anybody.
Right.
And,
that's old school. Yeah. I immigrated to this country in my 60s as well, so that resonated a little bit with me. But I've heard about that incredible pressure in some cultures as it relates to occupation. And that's why I wanted to ask the question so anyway, I kind of we went off on a little tangent there, but thank you for doing that. So, I know one of the things that you're known for, obviously the name of your podcast is The Wealth Formula, is the nuts and bolts of a wealth formula in your view of the world. Can you speak to that? Let's go a little micro on that, if you don't mind.
Yeah. So, one of the things that I attribute my own financial success to is, one of the things I'm really good at, and I used to, I'm a trained surgeon, and what surgery came down to for me and learning surgery was breaking this big complicated image of a procedure and act into tiny little steps and breaking it into pieces. Because when you understand those little pieces and those, move to move, you can pretty much learn everything. I really believe that. And, there's surgeons, surgeons I know love to make it seem like everything is so darn complicated. But, when you start doing the same thing over and over again, it doesn't feel that complicated to you anymore. And you probably have things that you do that seem really complicated that in your head, they don't feel that complicated anymore. And it's because you've broken them down to their elements. For me, I wanted to do the same thing for wealth. And for, understanding my background as academic. And, I was also almost a history major and stuff, but at the end of the day, I really sort of identified as a scientist and a math science guy. And so I remember looking at an equation. It was a Newton's equation for momentum, and I reminded of momentum, right? Momentum. And momentum has a feature that is very much like what you want when you think about growing your own wealth. Newton defined physical momentum as the product of mass times velocity. So basically, in layman's terms, how much something weighs or something, and then how fast it's going, right? And so it occurred to me that there was a lot of parallels with that, and the concepts that I was looking at in terms of what really at its core brings people who I know who've created a lot of wealth, what elements there are. And coincidentally, I thought, well, mass and velocity actually explains quite a bit. Mass in financial terms would be, well, how much do you invest, right? Because a lot of people make a paycheck, they don't invest very much. Maybe they don't make enough to invest, but the more you can free up to invest, the more you're actually going to be able to create more money vis-a-vis these investments. So if you don't have any money, you don't invest, then it doesn't matter what the rest of the equation is, you're going to zero out. The next piece of this is velocity. Velocity, again, in the terms of financial terms, sometimes we talk about the velocity of money. And when I think of velocity of money, I think about it in terms of my investments. I define that as how quickly it takes me from the point that I invest that money into something, that point at which I am returned that principal so that I can invest it into something else. So you can look at this as a return on investment. People might say 10% return on investment, et cetera. And what that means is if it's a 10% cash on cash return, really what that's telling you is you'll get your money back in your pocket, become whole in about 10 years. Now, listen, that's not the worst thing in the world. 10% is really quite good. But here's the thing. The magic that everybody who makes a lot of money, who's created a lot of wealth, understands and knows that it's almost impossible just to take these two elements, mass and velocity, and change your place in society. You're not going to go from middle class to being hyper rich by just using mass and velocity. And that's, what you're hoping to when you invest in the S&P 500, just you're getting your 7% per year. There's one more variable that's critical to that, and one that is, in many regards, controversial in financial talk, and that's leverage, right? So wealth in my book is a product of mass times velocity, all amplified by multiplying it by leverage. Leverage is, of course, other people's money, bank money, et cetera. But the value of it is that mass times velocity, you may get your money back in, 10 years with doing it one way. But if you add leverage, you may get your money back in half the time. Mm-hmm. So the whole concept for me became like, how quickly can I get my money back in my pocket? And leverage amplifies that. And if the real life example that probably a lot of people and your listeners are familiar with, is the cash out refi, right? If you add equity or you create you get appreciation and you cash out of something, but you still have all the equity and you redeploy that into something else, that creates in effect some kind of infinite return model. And that's really, if you do that over and over, you can make, a lot of money. Now, one last thing I'll add to that. Conceptually, if you think about what we're talking about, mass, this kind of becomes like a feed forward cycle, because one of the things we said before is if you don't have mass, you don't have money to invest, then it's going to be hard to create the wealth. But here's the beauty of it. Now, because you're using leverage and you're focusing on velocity, you're not just expecting to put more and more money into this, you're actually recycling the capital you put in and you put it back into the system and do the same thing over and over again. So to me, that's what I call, a wealth 2.0 perspective. And it's, hopefully that makes sense.
No, it absolutely does. And that's, I know that's what you do. I'm sure that's what you do in your assets and investments, just like we do. Name of the game is refinance within 3 to 5 years, get all or most of the money back to our investors and ourselves, and then redeploy it and continue to, enjoy the cash flow from that first asset, not necessarily sell it, keep it, like you say, refinance it, and you're off to the races on the next one. So I love it. Let's talk for a minute about where we are in the market cycle. Before we started recording, we were thinking about some great topics, and that's when you enjoy talking about. So why don't we go there? Let's talk. How do you feel about where we are, and what does your crystal ball tell us about what could be coming?
Well, I don't have a crystal ball, obviously, but here's what I think. I think that if you look at what people had been predicting over the last 6 months, they were most people. Not most people, but a lot of people, high profile people, even within real estate, who were generally bullish in real estate, were predicting a zombie apocalypse. And, at the very beginning, I wasn't sure which way it was going to go, but about 3 months into it, Rod, I think you probably, being in the market yourself, you started to understand that, darn, this multifamily asset, particularly for us, the working class space, is pretty darn resilient.
Yep.
To what was happening. And so we actually ended up doing just fine. And in some of our assets actually, outperformed pre-COVID levels, which was surprise to everybody, right? It was a surprise to us. Now, I think that this year, barring something completely unexpected, we will continue to see recovery, and then ultimately sort of hopefully the end of the COVID issue. Now, there is a lot of recovery to go on in the economy. Clearly we've been in a recession, and we are starting a new cycle. But what's really confusing for people in real estate and multifamily real estate is, hey, weren't we supposed to have some big correction? No, we didn't really have a big correction. And for a couple of reasons. One reason was interest rates fell, and that caused cap rates to compress even more. And the next thing, which we're feeling, and I'm sure you are, is that other people in other asset classes, hotels and real estate and office, big money that was in that, looked in retail, and they looked to see what we were doing and how we were doing. And they were like, holy cow, these guys did just fine. So all of this sudden, all of this money that's sitting in the stuff that got completely devastated, all of a sudden is jumping into multifamily apartment buildings. So we have not seen, and I don't believe we will, over the course of the next several years, a big dip in the market. Because I think even Jerome Powell, I think, has given us a pretty good indication that there's not a real appetite from the Fed to do anything disruptive to interest rates. And I think that process of low interest rates is probably going to continue for the next 3 to 4 years, extremely low interest rates. I think the demand will continue. And I think that, the Fed's ultimate goal is, to create inflation. And knowing that, I think we're positioned quite well. I mean, I think that at the end of the day, I think it's challenging for people to wrap their heads around when these large assets that are trading at, sub 5 cap rates, that how can this actually be, a good time to buy? But I anticipate actually it's going to be more competitive in 2 years than it is today.
Yeah. Interesting. I have a contrarian mindset only maybe because of what I suffered through in 2008 and how this feels like it's frothy to me, like it was in 2006 and 7 for me. But that said, everything you just said is very compelling. I think what concerns me is two things. One, I know there, according to an article I read, who knows, I didn't fact check it, but there are 40 million people that are either facing eviction or facing foreclosure in this country, which is a significant number. And then the other piece is the stimulus and the fact that our national debt's going to be 30 trillion. And so, I had these visions of $100 loaves of bread, but so who knows? I do think that, that stimulus certainly, this economy is driven by consumer spending. And of course the stimulus helps with that, but, it'll be interesting to see. I do believe multifamily will weather whatever happens. I'm just not so sure we've actually seen the recession that, you're saying that COVID was the recession. I actually think there's still more coming, but that's why I love multifamily.
I think we have a ways, right? I think we have a ways. I mean, it's going to be, even if we added, 200, even if we even added more jobs than we've ever added before, it'll still take a couple years to get to the same level of employment, et cetera. But, okay, let's just step out of our, your typical macroeconomic, forecasting for a second. And just, to me, sometimes I use this, my spidey sense. Okay. And maybe that's not a good way to go, but it seems to work for me sometimes. And in this situation, I look at the COVID world, and I think to myself, what are all the things I want to do when this is over? And I think about all the travel, and I think about all the concerts, and I think about all the money I want to spend. Right. And I can't be the only one.
Yeah.
And if that's the case, guess what? Roaring 20s.
We're good. Yeah.
The roaring 20s. You're going to, in my non-economist sense, is that it's going to be rocking and rolling. GDP is going to be growing at record rates for the next few years. That's what I really believe is going to happen. And if that happens, I think not only are we in the right asset class if it doesn't happen, but being where we are, I mean, man.
Definitely in the right asset class. Either way, it's the right asset class. Back in 2008, when the market crashed, within 3 years, the rents were back to 2006-7 levels. I mean, 3 years, that's all it took to recover. And, we are, and I mean, don't get me started on retail and office right now. They're gasping for air. And so, but
where's that money going to go, Rod? That's the question, right? And that's another thing to think about for multifamily. Retail is only going to get hammered even more.
Yeah. Amazon, you bet. Yeah, for sure.
Office, everybody's learned how to work from home.
And they like it. That's the thing.
And it's cheaper for business.
Right. Absolutely. And I will thank God we were virtual before it happened. But, until they come up with other uses, we're seeing hotels getting converted to multi, and, it's a long, laborious, painful process, but we're seeing, repositioning of office buildings, even in some cases. And so it's going to be interesting to see what happens to those asset classes. But, I love self-storage and mobile home parks. I know, warehouse is still doing great. Industrial, of course, is doing great. So, those are the two that got hammered. So that's very interesting, very compelling argument for your position. I had Harry Dent on my podcast, and of course he's the doom and gloom guy, and Peter Schiff as well. And they've been talking about a crash for and they think it's happening like any day. And so but Peter I think sells gold, and Harry, Harry. Well, I will say this about Harry though, and the reason that I gave his interview so much credit is I saw him speak over 20 years ago. And had I listened to him, I would have gotten out of residential real estate and I wouldn't have lost $50 million. So I was really compelled to listen to him this time because he nailed it. He totally nailed the crash. But so we'll see.
Well, here's the problem with those guys, though. Right. And I've had both of them on my show, and actually I think Peter does have a little bit more of an agenda. But, here I think he says what he believes. And I think there's a lot of value in following, especially in his demographic data. Right. If you look at, based on that, I would look at 2030 and say, get the hell out of every market. Right.
Right.
But what's interesting about these guys is that, listen, doom and gloom, I have to tell you, and as well as I do, you're in the podcast space, doom and gloom and fear sells.
Yeah.
Okay. And even a clock that's not working is right at least twice a day. Right. Peter has predicted the last 7 of the 2 recessions that we've had in this decade. Right. And so, I don't take a lot of what he says here. I don't even know if he believes it sometimes. He's really smart.
He's really smart.
About it. He's a really smart guy, but I just don't really believe that. I just don't buy into his theories. I really don't.
All right. Before we leave this topic, it's funny you said about negative sells. I did a YouTube video on the coming real estate crash of 2021. I got so much hate. Oh my God. I've never had so much hate in the thread, but, this is my highest watched YouTube video ever. Like, I think, 80, 90, 100,000 views. It's crazy. It's just to add a testament to what you just said. But, but let's talk for a minute about the trillions that are going into the economy. Do you feel like that does that give you pause at all?
Not really. I think what does it do? What are we worried about with those trillions going into the economy? We're worried about inflation, right?
Right.
So as long as you're not sitting on your cash and it's not in assets, inflation actually helps us.
Yeah.
Inflation, particularly real estate investors who are using the big L word, leverage.
Right.
Because let's just, as a reminder, I know you know this, but what happens to debt during inflation? Inflation erodes debt. So if you let's look back at your parents' home that they bought in the 1970s, and they bought it for $50,000 or $20,000, and they took say it's $50,000 and they took a $30,000 loan. Today that house is worth
300.
Yeah. How much do they owe on it?
Right. Nothing.
Right. So back then it seemed like a lot, right? So inflation erodes debt. It is actually a very positive thing for real estate investors because we use so much leverage. It's almost like we're printing our own money.
Yeah, because the amount of the rents will go up.
Right.
The debt coverage will not go up. The cost of the debt will not go up. The cost of the debt will not go up. And so, the value of the dollar may be less. But as it relates to the assets that we have, it's an incredible hedge against inflation. So no, that's a great answer. All right, well, let's shift again. I love the psychology of success. I love to talk about mindset and psychology, and you do as well. I understand. That actually surprised me because I know you're super analytical. So give me your view on mindset and psychology as it relates to someone's success. That's just however you want to answer that.
Yeah. Well, I think that at its fundamentally, you cannot have that which you don't imagine first.
Right.
And in order for you to have anything, you have to have it in your mind. You have to see it. And that in itself is not, I think I'm an analytical guy. Yes. But here's the thing. Here's a fact that before anybody who's out there who got married and had children, they imagined being married and having children, right? I think that the problem with the problem is that if you can't imagine it, it'll never happen. I think that's fundamentally
I agree.
fact.
And by the way, let me be clear. I wasn't, what I meant by that is I know you're talking at deeper level topics on your podcast. And that's what I meant by that comment about analytical. I mean, everybody that's analytical has hopes and dreams and very successful people that come from that background, from that place, utilize mindset and psychology to get what they want. That's the reason I said that. So yeah, you have to see it. So there's absolutely no question, which is why I spend so much time on it, because so many people are caught up in fear and limiting beliefs and comfort. But anything to add?
Yeah, I mean, I would say one more thing that I think that's important, and one thing that I feel like I've discovered in the last few years is that vision has to be big, has to be.
Yeah.
Because what I found in the last few years, and I'm, again, going into this different world, I consider myself a fairly, I don't use vision boards and stuff, but I am a pretty potent manifester.
Why do you think that is?
I don't know. It's not something that I can really explain, but what I know is that when I get something in my head, it is effectively a vision board, right?
Oh yeah, that's why.
But I think that with vision boards and stuff, I think they're particularly helpful for people who are not innately powerful manifestors. So I feel like in my life I have been a powerful manifester. And one of the things that I realized, and unfortunately this takes time, it's a course of 5, 10, 15 years at a time, and you learn these lessons. But sometimes when you think about something and you manifest something, you're only manifesting to the next level, right? So say it's a financial thing, because this is going to be a ton of different things.
Anything, yeah.
Right. But let's say it's easier to understand in financial terms. If we make if you're somebody who makes $100,000 a year, and you're getting you're $10,000 a month, you may imagine what it would be like and think, wow, wouldn't it be great to make $50,000 a month instead of 10? And that seems like that's in your head, it's fantastic. And then one day you get there and you're like, man, but somebody else is making $500,000 a month. Right. And I wonder what that's like. And then you have to stepwise go to the next step. So I think and I have not tried this, but it's something I am kind of thinking about consciously trying to do now, is trying to skip the step, because you're almost
to the big number.
Well, because you're almost constantly, when you do this, and I don't know what your experience has been, but it's almost like you're always a step behind. You get there and you're like, damn, that's what I wanted, but now I want something bigger. So is there a way, and I'll leave it to, you.
No, that's really funny, because I'm in the same place right now. So I'll share this. I didn't plan to share this publicly because you brought it up. I'm going to mention it. I used to have this sign above my bed said $100,000 a month.
Yeah.
I've eclipsed that, but now that number is 10 times that. It's like,
Right.
You know what? I'm not going to just go to 2, 3, 400,000. Let's throw $1 million up there and see what happens. I know it works. But, one thing I noticed about you, Buck, it's very interesting. You talked, you don't have a vision board and you're not, you don't need that visual picture. But when we're talking, I noticed that your eyes go back up in your head and you're searching your brain. And I would guess that you've probably got really clear mental pictures because your ability to think and analyze and, that maybe that's why you don't need the actual physical picture of something. I don't know. I'm just spitballing.
I don't know if it's clear like photographic kind of images, but I think I throw it into the
ether.
The ether.
Yeah.
You know what I mean?
Uh-huh.
Like I start, you talk about limiting beliefs and stuff. I think that for me, I have to figure out, like, am I doing something right now that would prevent me from getting from this point to this other point that I think I want to be? If there is that, then you need to correct it, because, I've always believed in this concept of being able to manifest, but I also think that you do need to help it along a little bit, right? Like if you are doing something on a daily basis and it's consuming all your time, it's going to be very, very difficult to, in a way, it becomes a roadblock to what you're trying to do and what you want to accomplish in your life. So you do once in a while have to stop and say, okay, here's my goal. Is my current trajectory in my life actually going to give me the chance for that to be possible? Right. Yeah. So I find myself in my head often throwing ideas in, things like that into the ether, and then checking myself to make sure, hey, is there anything that I'm doing right now or not doing that is going to prevent this from happening? Mm-hmm. I almost feel like I don't necessarily have to force it to happen, but if it's in the ether and nothing's in the way, it sometimes seems to find a way.
Interesting. No, that's very interesting. You said something that I want to speak to, because I have a lot of analytical listeners, and they are the hardest to get across the finish line, to actually take action, because they have to check off all the boxes. Now, you are an exception to that. Obviously, you've taken massive action, and there's an expression: if you're in your head, you're dead. That's that analysis by paralysis dynamic. Can you speak to those people that because you can do a better job than I can about pushing through that for a moment?
Yeah. Well, I think let's go back to the why people are the way they are. Robert Kiyosaki is famous for saying, A students work for C students and B students work for the government, right? And so Robert's, tax advisor, Tom Wheelwright. Tom's my CPA too. And we were talking about this once. And I said to Tom, because Tom was an A student. And I said, Tom, the one thing that Robert always skips in this whole thing was that the C students never really had that much to lose. You know what I mean? Like, if you were an A student, you were getting everything right, and you got the positive feedback, and you got your grades to show, and you got to brag, and the teachers patted you on the back. And the C students never had all of that, right? So they had nothing to lose. So yeah, that's fine. They work for this, but there's a reason for that, because what happened with them is they were not afraid to fail, and they were out there making their way, creating their lives, because it was very clear to them that they were not going to just, live the academic dream and be the top of the class and be the smartest and go do stuff. So they had to think early on about, hey, I'm going to do something. I'm going to do something big, and who cares about the school thing? So they got a head start. The analytical types who were doing really well in school, they actually are trapped. They have a bigger hurdle than anybody else, because they have to get past this notion of, being good at what they are good at isn't good enough for what they want to achieve in their lives.
Oh, yeah. Yeah. Good stuff. Good stuff. Yeah. I hope you guys heard that. It's harder for you. It's harder for you, those of you that are super analytical. And I get that. And that's why I do everything I can to try to push you to take action, because action mitigates that fear, and it's counterintuitive. That fear of failure, I would just encourage you to fear regret more than failure, because to me, I can't imagine anything worse than regret at the end of your life. But Buck, this has been a real treat. Thank you so much. You've added incredible value today, my friend. And
Thank you
guys, go check out his Wealth Formula podcast. I appreciate you coming on, my friends. Good to see you.
All right, take care.
All right, thanks.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year, we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step, and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon, apply to work with us at mentorwithrod.com or text CRUSH to 41411. That's mentorwithrod.com or text CRUSH to 41411.